What's up, everybody, and welcome to another episode of the Abundance Podcast. So, here with us today, we have Joseph Berger, a very interesting guest. So, what's up, Joseph? How are you, man?
What's going on, Alexis? Happy to be here.
Yeah, well, thanks for coming in. So, why don't you tell us a little bit about your story and how you became the man you are today, and who,
Sure,
who you are
sure.
today as well?
Well, I'm currently 20, living in Miami. Just moved down here about a month ago. Alexis and I had met at a fund launch conference about 2 months ago and kind of spoke all of this into existence, which was moving down here. But yeah, my story is very interesting. I actually initially started off by like creating a fitness page when I was like 13, 14. And through that Instagram page, I had like, you know, 20,000 followers or so. And it was just impossible for me to not question everything that other people were doing. And at that point, I just started diving into like different businesses, marketing, trading, went to some conferences here in Miami when I was like 15 with Grant Cardone and a couple other guys. Don't really like that guy, but it was like a good first conference, I guess. I wish I could have gone to something with like Bridger Pennington when I was 15, I would be even further ahead. But yeah, along with the story, I actually dropped out of high school when I was 15 and made a very bold move. And in the state of Connecticut, where I grew up, you can't drop out until you're 17. So I was making a little bit of money at the time. I got into network marketing, and that helped me build my entire network. So when I was like 16, I was doing 10K a month with this company that sold like automated trading products, and they didn't even have it figured out. But I saw this group of guys, they were like 25 to 30, and I thought they had it figured out. They were making good money, seemed like who I wanted to be like, in the next 5-10 years. So I locked arms with all of them and became one of the top earners in the company. Got invited out to Miami a ton of times, spoke at some events. And yeah, while I was doing that, I had to sue the school district from where I grew up because they were threatening my family that like I had to go back. So I had like a family lawyer write up a note, and they kind of screwed off for the next year or so until I could legally drop out. And yeah, then I just continued what I was doing and dabbled a lot in the trading space, high frequency trading products, figuring out that doesn't work, what does work, what doesn't, trying to create a long track record with this stuff. And that's what we've been able to do the past like 2.5 years. So I decided to get out of network marketing and into the more like private fund management space, a lot of stuff to do with PAMs, and managing money and leveraging tech. So we've been able to maintain our consistency for the past 2 years or so, and it's all audited and whatnot.
So, what are you doing right now? You have some kind of, is it a hedge fund and managed accounts, and what's your role?
Yeah, it's more of a managed account model. I started it along with one other partner. It's called Spider Capital, and we now have over 8 million under management. It's a really interesting subject because I think the account management model is a lot better than just creating like a one fund in one location. So
Why
we
do you
have,
think that?
because, well, there are a lot of multi-billion-dollar Ponzi schemes that have just been exposed in the past, couple months. Traders Domain, another one's called FX Winning, and they actually don't do any real trading, and they're only on one interface. So we've been able to build out our track record, and now we're expanding out onto other brokers and all sorts of different jurisdictions and regulations. I think that's just the best way to gain legitimacy now because people are getting smarter with all the scams that kind of went on.
So, and what do you do in the managed account company?
Yeah, my role, I directly worked with our developers. I have two developers that we work with, and some of the most renowned developers in the space that we've been able to lock arms with the past couple of years. The connections kind of grew from my network marketing connections that I had made, and private networking and stuff. So we have been building out different trading robots. We use a couple, and we've been consistent for the past 2 years. So what I do is I work directly with the developers. I'm not a coder by any means. I have very high levels of interest in building solutions, but it's more so just looking at data and always reacting and improving on what works and what doesn't work, and then communicating that to our developers, and then on the other front, raising capital. So
Right. So you're kind of a data analyst, and then also a money raiser as well. So the 8 million of assets under management of your managed accounts. Well, first my question is it high net worth individuals? Is it trading? Is it institutions? Is it a proprietary trading firm? And how much did you raise out of that 8 million?
sure. Well, it's sort of in the middle because it's very hard for us to attract institutional level investors right now. That's why we're pushing our licensing and regulations into the US and more strict countries so that we can get that. It's mainly been raised through family and friends. I've raised just over 1.2 million myself, and my partners and other sourcing partners that we've uh, partnered and locked arms with, I've done the rest. But it's a lot of family money from myself, my partners. They have the biggest accounts in the project, which I
Hmm.
think says a lot. Speaks volumes.
And what kind of returns are you aiming?
We currently average 7.3% a month since December 2021.
Is it in forex?
Yes,
So how scalable do you think your company is? Could you
that's
grow and keep the same return for with 100 million, with two
you know
hundred, 500?
that's a really good question because it highlights a very interesting subject, which is that we're playing in a game which is one of the most competitive markets that you can trade in. You're directly competing with people and huge institutions that have 8 to 9 figures just to pour into their trading algorithms, and can hire dev teams, pay whatever amount of money that it takes to get that tech running. Whereas us, we don't have 8 9 figures to throw at this stuff. So I think, tying back to your question, this can only be ran up to 100 million, and then we would have to cap it out because there's just going to be problems
Yeah, I
that are
mean,
going to stay under the radar.
most. I mean, I don't know anybody who's capable of keeping these returns and scaling to more than 100 million, because that's basically the not the main problem, but the main reality of trading is that you can have really high return exceeding 100%, 150% a month, and the average people would be no, not a month,
I
a
was about
year,
to say a year.
a year. Sorry. um, and then most people are skeptical, but the thing is that you can do that if you're small. Scaling even 100 mil, if you could do 7% a month with 100 million, you would be like superstars.
It's like,
So most often than not, when you have high returns, that's the not the problem, but the reality is scalability. Like in my hedge fund, I have one trader who's gonna come in, and who is the owner of my trading firm that I'm working for, and basically he's doing 100% return, 200% return a year, but he cannot scale to 100 mil. Right now, he's even going above 10 mil, above 25 million is going to be a hurdle for him. So for us, with our training system, we keep our returns at I mean, I'm not going to say or target returns, because we're a 506B, so we cannot publicly advertise, but we keep them lower, but we can scale and keep the same returns to more than 100 million, and hopefully, without encountering too much liquidity issues.
yeah, agreed. That's what we've seen as well, and it's all subjective to leverage as well. Like, we're able to get 500 to 1 leverage on our projects that are done offshore, regulated out of uh, either St. Vincent or Mauritius. South Africa is where our biggest project is based out of, or regulated out of, which is the broker that we have most of our funds with and the longest track record in. But if we were to go to an interactive brokers, for example, we would have 10 times less leverage. So I would take our same systems and aim for no more than 30% a year.
Mm-hmm.
But in return, I can get more capital in a institution or broker like that rather than something that's offshore and less well known.
Yeah. And how about a clearing firm? Did you ever think about that?
What's that again?
A clearing firm.
What is that?
I mean, I'm not that savvy into that space, but basically that's something I've learned. It's basically you put a deposit with a clearing firms. Most often than not, it's a high minimum deposit, somewhere around 5 to 10 million, and then you get a lot of buying power. They issue you a lot of buying power. So I mean, we're not gonna dive too deep into the subject, but into the podcast, because that might not interest most people. But and I'm not that savvy in the area, like I said, because I'm not utilizing one. But that's maybe something you should look into.
Mm. Well, that sounds like something more on the LP level, and when it gets to that point, you have to either put up funds with the LP or just communicate that to them.
Hmm. Yeah. And so, other than that, so let's get back to like how you started, right? So you were 15 when you dropped out of school,
Yes,
and when you dropped out, did you have any revenue, or was it just a leap of faith?
it was definitely a leap of faith. I just got right into sales, and I mean, I had like my parents' support. They can't
Oh
kick me out
yeah,
until
your
I'm
parents
18, so
supported
I had
you
a place to
to
live.
drop out.
Mhm.
Yeah,
What's that?
your parents supported you to drop out.
Not quite, but they kind of stayed out of my way.
Oh yeah,
And
at 15.
once I was, making a lot of calls and they saw I was busy and I was making some money, then they started to get behind it and just allow me to do what I was going to do.
And so, what were you doing? You were selling financial product.
No, we were selling technology. So we
You
were
were selling
selling
to traders.
to traders or just any individuals that were interested in passive income. So
Mm-hmm.
we were selling these trading bots for like
Okay.
a low ticket price, and it was more of a network marketing thing. So it wasn't high ticket where you're either making money off of a performance or uh, like a high ticket product. It was marketed to the masses, and unfortunately, at first they didn't have it figured out to the point where since the trading tech wasn't good, people would lose money, and then the whole company would just collapse. So
Mm-hmm.
it wasn't stable to stay in, and that at that point, me and my partner that I still now work with, we decided to get more into the like performance based space where we're able to work with clients with minimums above 50K or more, just to start off.
Mm-hmm. Yeah, and returns you're offering are competitive. Let's just put it that way.
Yeah, yeah.
7% a month. It's really good,
And
and you have the track record since 2021. So well, December
2021,
2021.
and no one else in the space. You'll ask so many people. I even meet people here in Miami. I'll sit down at like a lunch meeting with them, and I just know off the top of my head, uh, just by hearing them for a couple minutes, that like there's no way this guy has made more than a couple 100K actually trading. He's sold some course and actually doesn't have any sort of track record. It's all just screenshots, all 1 month here,
Mm-hmm.
1 month there, one good day, and then they just market that, and it's not the space that I want to be in. As for I
Yeah.
want to build out a audited track record that no one else has and stand the test of time. So in this space, uh, having a MyFX book that goes on for years and years, it's very, very uncommon. And we're actually one of the few companies to actually have it right now. So we're kind of just trying to capitalize on raising money in the correct way but I'm here seeing what the problem is, which is there was a bunch of other Ponzi schemes that went up under the same structure, which is like a PAM, which is a percentage allocated management module within a broker. So we don't actually hold any client funds. They keep the funds in their own brokerage account, and then through the
Yeah,
PAM software, uh, they
it's
can essentially connect to like a copy trader. So we actually, well, we don't manage money under a PAM style agreement. It's more so a copy trading service, and we're selling technology. But I do want to get into account management more so.
yeah. Well, I mean, that's basically what managed accounts are by definition. But like in order to really scale, I think you need some kind of fund, whether it's a hedge fund or maybe
Hmm.
some kind of other structure. But I think managed accounts are there's a limit to the scalability, not because of the structure itself, but mostly because you're not gonna raise 10 or 50 millions from an institution and have managed accounts, right? You're not gonna ask an institution to create an interactive broker account, right? It's the like a fund is a more scalable investment vehicle. Wouldn't you, do you agree?
Yeah, I agree. That's
Hmm.
a lot what we touched on at the event. So we're still in the process of creating our own fund, but right now, a Spider Capital is just a syndication of PAM accounts and privately managed accounts.
So what's the vision for the next 5 years for the fund?
For the next five
For
years,
the managed accounts, yeah, for your company and for you.
yeah. Well, step one is getting our fund set up and pushing into harder and more strict jurisdictions like the US. It's going to be very hard to compete in that sector because it's so hard to even create a fund that's regulated out of the US, but we're going to try and do it. And then, yeah, just to get this to 25, 50 million, 100
Hmm.
million, push the envelope, and ideally just have it be a good passive income vehicle for myself and everyone that I choose to work with.
Yeah,
Um,
I mean, managing $100 million fund, yeah, I don't think it can ever be passive.
mm-mm.
But regarding your actual strategy, is it algorithms or is it machine learning or AI?
It's primarily algorithms. We don't
Okay.
have any AI. AI isn't really applicable in this space, which is a MQL4, MQL5 code. So our strategy right now consists of three separate EAs, which are expert advisors coded in an MQL4 or 5 format, and we also monitor the accounts. So it's like a hybrid situation, I would say, because sometimes more on the risk management side, there's things that the algorithm isn't good at, where me or my partners and our developers could step in and manage our risk a little bit better. So turn it on, turn it off, adjust settings, maybe don't run it on certain instruments at certain times, and
Hmm.
things along those lines.
So if someone would want to start, into the algorithmic trading world, would you recommend it? And how
I,
would you recommend to start?
I would recommend it. You can go down two paths. You can either leverage the technology that someone else has worked years and years to put together and vet out their track record, ask hard questions, and lock arms with them. I think that's one of the best things that someone can do if you're new in the space. But you have to have a very good eye for what's real and what's not real, and ask those hard questions. On the other end, trying to learn trading yourself and trying to build these systems yourself, it costs a lot of money, and you'll work for a lot of years and
Yeah,
make
I
nothing.
would say that my advice it would be definitely to network, network, and network. So basically, I'm coding algorithms as well. I'm not the coder, but I'm developing strategies. Um, Not for my hedge fund, for my trading firm. And the thing is, I would say if you really want to get into trading and or algorithmic trading or whatever trading, you don't want to do it by yourself. You don't want to. I used to do it by myself and just be alone and just grind it out. But you should leverage the time of other people and leverage the expertise of other people better than you. So you network. Maybe you find a trading firm that will hire you, best case scenario. And once you're in the trading firm, then it's the best. It will exponentially increase your learning curve. But let's say you're not able to find a trading firm, at least find a close network of um, of other traders and of better traders, and then you'll just learn so much faster than if you're just by yourself grinding it out in your basement, looking at YouTube videos and or buying courses.
Mm. I've been down both paths. Working alongside a lot of people and then trying to work alone. And I would definitely say having a team always is the best option. It doesn't have to be a big team, just one or two people you can trust and sit in a room and always improvise and come up with better ideas together than you could by yourself. So
Mm-hmm. Yeah, yeah, because you need a community, even, and that applies for every business, of course, uh, but especially in finance and in trading, because you have to leverage the expertise and the time of other people, and hopefully you can do like we did and team up with better traders. I mean, I don't know if there's, I guess there's strategists in your fund, right? There's strategists, and then you're a data
analysts,
analyst, and then there's coders, right? How big is your team?
less than five.
Less than five. Okay, so two coders, you, and the other ones, what do they do?
And my partner, and then just another person that is helping to raise money more on the marketing side.
Okay, so two programmers and two strategists.
Mm.
Hmm.
Yeah,
Interesting.
nothing too big because our track record proves itself, and there's by adding more people into the loop, it makes things harder, and then we also wouldn't be able to offer as much of a competitive profit split. So it starts at 70-30 for us, investor favor, and then it goes up from there based off the amount of capital that people have allocated into it.
Mm-hmm. Right, and so you're into forex, right? So why the foreign exchange market?
Yeah, that's a good question. Trading commodities, right? Well, that's the only available thing that's except for commodities and indexes, right? That is offered in brokers like this under a PAM structure, and in the MT4 trading interface, right? You can't really go into the CME markets and trade, like the S&P in the same way that you could on like a broker like Interactive Brokers. So from the platform that we're most familiar with, we see FX as the one of the most stable because the indexes and commodities they're all over the place. Number one, gold is one of the least liquid pairs in the space. So when you come to trading large amounts of money, dealing with slippage and everything, just it's way too much risk. And we've constantly been testing systems on indexes and gold. We've never rolled it out onto our fund. It's primarily been just Forex and a lot of different pairs, over 20 different Forex pairs, but all with different risk and different strategies for each one. I think there's a better, it just has a better movement as for supply and demand and how that goes and how our strategy works. So it's just
Mhm.
less risky in our eyes.
Yeah, that makes sense. And also, forex is like you said, it's the most liquid market, and that's a big well component of a trading system, to have the liquidity, and especially if you do high frequency trading, or you do small positions, not small positions, but fast in and out. It's the SPY, so the S&P,
Mhm.
the ETF following the S&P 500. it's really not that liquid compared
No.
to Euro USD, compared to GBP USD, GPY. All of the main currency pairs are so much more liquid than the SPY.
Yeah, yeah. It's also tough though because a lot of most successful hedge funds and strategies that I've seen that are outside of our space, so they wouldn't be able to track it on a MyFX book type of situation. They're successful trading the out of the Chicago exchange, trading the CME and like mainly indexes, but it's done in a different way. So I've just seen those companies. I know a couple actually maintain like 3 to 5 year track records or longer, whereas in the forex space, you never really see anyone with over a couple months. So,
And why do you think that is?
well, all the influencers and traders that are trying to make money off courses, that's one thing. The other thing is that we're in such a competitive market. So uh, you're competing with people who have billions and trillions of dollars that are trading the market in a completely different way than you and I would trade it. So it's just very competitive, and that's just kind of ties into why it's so hard to be consistent. There's always one event that'll happen, and it'll just destroy someone's strategy just eventually.
Hmm. So you would say that the foreign exchange trading the forex is it's more difficult than trading just the equities or
Yeah.
gold or oil.
Uh, at least from our end, we put a lot of emphasis on it. So I wouldn't say it's easier for us.
Well,
Um,
it's your specialty, of course, but it's more competitive, and it is clearly the the market with the most volume and the most big institutions, but and I trade forex on my own, but not professionally, so I'm not that much involved in it, but it is quite unpredictable and maybe harder to find patterns. In the S&P 500 and SPY, just the fact that there's a more there's a lot of more transparency in what institutions do. In forex, you don't even have proper volume. In the um, in the equities market, if you have the right tool, you can see what institutions do. You can basically track the footstep of the elephants, right? I mean, it's like playing poker versus someone, but your opponent is just too big, have too much money, so he has to show you his cards. Versus in the forex, I don't know if you're able to do it, but I don't know anybody who's able to see institutional and buying, and there's just so much volume and there's
that's
so much
that's what our
institutions.
strategies are actually focused on, is spotting those institutional swing trading moves.
So are you
Um,
doing it with volume or with another
I mean,
deeper data set?
so one of our systems actually spots these swing trading setups, which is when the market is in a place where there's institutional money being poured in, right? So that's done through seeing volume in a certain time frame, based off of how overextended the pair could be, and that's it gets to the point where banks with thousands and thousands of lots are looking to sell their orders, and we've created a one system that spots those setups, and then we evaluate it, and then allow another system to actually scale into the setup.
So it's all based on volume.
Mhm.
And how do you identify if the volume is from institutions? Is it just because of the size?
Um, mainly candlesticks and where like the macro data lies.
So you look at macros.
Mm. It's much more important than understanding like an intraday setup. It's more solid. If you look at a higher time frame on a chart, even if you're not a good trader, most of the time, you'll be more accurate with guessing where it's going to go than like a 4 hour time frame.
So for in general, for how long do you hold your positions?
Our average trade length is 3 days.
Okay, so liquidity is not an issue for you guys. It's leverage.
There's no issues.
No, but when you're gonna scale?
To scale right now, the issue is completely apart from the trading. The trading is actually all perfect at the moment. We constantly reinvest into our strategies and our developers and making everything better. So that's not the issue. The issue is taking our service to different platforms that are going to be more supportive of large capital coming in, I think. And then just really getting, our track record out there. Up until a few months ago, it's just been completely family and friends. So a lot of people actually don't even know about us.
You're not public. Like, do you advertise at all?
No, it's
Can
all
you
done
advertise?
through. That's tricky as well, because you don't want to be soliciting anything, but we can.
But can you solicit?
No,
Okay, you cannot do general solicitation with the public,
especially to uh, people in the U.S.
especially to people. So that's why you want to create an offshore entity.
And that we've done already. It's just we're not regulated in the U.S. at all, so it's impossible to use someone else's license that is in the U.S.
Mm-hmm.
Um, if you don't have regulation with your own company, they won't partner with you. So we kind of have to start from the ground up.
Right, right, right. So so then you're just everything is set up. You're just looking to raise more capital. What's your game plan to raise capital?
Yeah, well, I'm going to be consulting with a lot of people, and I already am, that have done exactly what I want to do and that have set up large funds. So I'm just consulting with those people and and then executing on the solutions that I decipher through those conversations. I feel like, and then to be more specific, I feel like it should just be we need to add more testimonials, um, and it's it's a tricky subject, I would say, because we don't want to go public with our stuff completely and market it on with ads and whatnot. So it's going to have to be just keeping it consistent, word of mouth, offering services on multiple platforms, and touching on subjects that people want to hear a solution for.
Mm-hmm.
Are you
Right.
familiar with the traders domain Ponzi?
No.
No. Well, anyone who's not familiar, go and watch CoffeeZilla's YouTube video. It's There's a $500 million Ponzi scheme that this guy had grown, and it literally just collapsed within the past like 6 months.
Oh, it's recent.
Very recent. And it's in the same, and that's why it's actually very hard for us to raise capital right now, because we're doing a similar thing under a PAM structure,
Mm-hmm.
whereas people just got burned because it was in one unregulated broker, and it was just being promoted by a bunch of people soliciting it.
Right.
Crazy story though.
I mean, I can understand. It's like if you want to start raising money just after the whole Bernie Madoff scandal, it's not the best timing.
Yeah, exactly that. So now I'm taking a step back, understanding what the perspective is across the board, especially for those that are familiar with our industry. That's why I'm saying it's hard right now, because everyone who's familiar with what an FX book is, um, they're more like leaning away, and everyone's being very frugal with their capital. People are leaning more into real estate and hard assets more than anything right now because any smart person understands how difficult the markets are to trade. So I feel like the only way people are gonna uh, get into something like this is if there's clear risk management protocols through the broker, right? If it's if it's done through a managed account situation or a PAM.
Mm-hmm. Yeah, that makes sense. I mean, transparency in the space is the most important thing, right? And I mean, transparency and honesty, as soon as you lose trust, or you lose the or you're not you lose your integrity. I mean, raising capital is going to be basically impossible, and then of course, there's the unfortunate Ponzi scheme that happened for you. But definitely, to be as much transparent as possible, it's as much important as having good returns, being transparent in the space.
Mhm. You stand the test of time, the money will come.
Hmm.
Um, we've grown a good bit now. It's just going to keep it consistent, and the money will come.
So, um, other than trading and other than your company right now, do you have any other areas of business that you want to get involved with? Maybe real estate, maybe marketing, any other ones?
Yeah, I do. I'm partnered with a distribution company. They yield returns of like 30 to 40% through FBA and stuff. So I I'm partnered with them as well. Mainly doing sales. I don't run any of the logistics for them, but it's someone I've met down here in Miami that I have a lot of respect for. So when it comes to raising any capital with them, it's all about yielding returns at the end of the day and uh, different passive income models. That's one thing, and I'm also partnered with a big real estate company out of New York City, which I can't name drop, but I've been able to gain a very good perspective on things in real estate trading through some of those conversations.
So, what kind of partnership do you have? You're an employee,
No, no, just under contract right now.
under contractor. Okay, so
Yeah,
independent contractor.
pretty much. Still trying to
Hmm.
figure out what the plan is to do
So
business
basically,
with them.
money raising and sales is your area.
Yeah, and then I'm very passionate about creating trading solutions as
Yeah.
well and
Hmm.
analyzing data. And then aside from that, uh, I don't have any businesses in this space, but in the future, I plan to use everything we're doing now as a vehicle to create massive amounts of cash flow to fund different businesses around men's health, biohacking, and anti aging. So that's something I implement in my daily routines here down in Miami, especially, which is going to the gym every day, cold plunge, infrared sauna after, taking different natural herbs and supplements, to increase testosterone and slow down aging. So I've been doing a lot of research on that, but it's mainly a hobby for me at the moment.
Hmm. Right. So you would want to have companies in that space. So
So the
mainly
goal is to take all of this, cap it out at 100 million,
and
and
fund businesses with the cash flow.
stay successful, automate it as much as possible, and then roll over into commercial real estate, residential real estate, private equity, and things that are more solid and have like more tangible returns.
Hmm. Yeah. Well, I mean, depends on. I mean, it's pretty. It's not tangible, I guess, but it's solid returns if you're able to keep it consistent. But diversification, I think it's. I definitely agree. It's a big deal, right? If you want to not have all your money in the stock market, even though you're a trader, you also want money in real estate and well in biotech company. So what is it about anti-aging anti-aging that attracts you and that makes you want to do business in that space because it's pretty unusual.
Really? Well, I guess it's very common for me, especially living in Miami now. There's so many people that are on the same wave.
Oh
It's
yeah.
the anti-aging is one thing. That's just something that I see there being progress in. I read a book like a couple of years ago by David Sinclair. He's a doctor with a PhD at Harvard, I believe, and he wrote a book called Lifespan, which is the process of reversing aging and slowing it down. Um, and just seeing that there's different practices that are already available to us that can slow down our biological age and how we can actually track that. So I see a lot of different people. Another guy's Brian Johnson. He's actively testing a bunch of different routines and getting all of like the actual data on what his biological age is. And yeah, I think what I'm more passionate about though, like that's just cool. Who wouldn't want to live till 200, right? That it's uncharted. It's never been done before, and it's the future of where the world is headed and where a lot of money will go to. So
Have you met Jim Cyrus
no,
at the Fun Launch event? No.
was it the guy handing out those like little like packets, or were they? Might have been a different guy.
I mean, it didn't end me anything, but maybe before I met him, or I don't know. But no, but you should meet him if you didn't, because I'll connect you guys, because he's into wellness, and like he calls himself the chief wellness officer of his fund.
Nice.
So yeah, you should meet him, and he's all about, like, he wakes up, he drinks like, he sent me what he does for his morning routine, and it's he drink like 1 liter of hot water with like this and this and this and this and this. It's crazy. I mean, I don't know how he.
That's interesting.
Yeah.
A lot of these people have like their own approach to it, which is cool. But what I'm more passionate about is like the decrease in testosterone of men across the board right now.
Hmm.
We're at all time lows for men's testosterone, and I feel like it's a really interesting subject
And
that's
what
not
do you
really.
think? What do you think that is happening?
Um, it's a lot in the diet that's perpetuated across mainly America, and just like this new culture that's like Western culture is somehow tying into it. It's got to be mainly the diet though.
Hmm.
Everything else would be like a huge conspiracy theory. Um,
Yeah, yeah. But I see what you're saying, and where you're getting at. The culture of that masculinity is getting weaker. That people are not encouraging to be strong mentally and physically when to men. Like, basically, I mean, you're not gonna going to the gym is, I mean, I wouldn't say it's disencouraged, but it's definitely not pushed in the media. The media are not saying go to the gym. They're saying, like, accept your body as it is. So I cannot see what
mm,
you're saying.
yeah, yeah, it's a whole slew of things for sure. But
And so
yeah,
what's the solution then?
what the solution is, I mean, it's confidence, going to the gym, and I mean, actually paying attention to what your testosterone levels are, because if you have higher testosterone than 90% of the rest of the male population, you're going to be able to do things that the other 90% cannot, right? But the solution more so lies in really feeding your mind and your body with the right information on a daily basis. I think it's not an easy answer, but just following people who are actively living the life that you want to live,
Like the Liver King?
the routines for sure. I think Andrew Tate can say all of this stuff better than I can. Um, Again, it's a touchy subject, but staying away from a lot of things that give you pleasure with no pain. The entire OnlyFans model situation and how many guys just resort to that for pleasure rather than actually going out and pursuing and becoming the man that will attract these women. And I've got to experience that, in real time. It's not even all about having like a good physique. It's about being well rounded and being confident.
Mm-hmm. Yeah, and talk to me a little bit about the culture in Miami, because I've been for a week, and when I met you, and I could feel the culture a little bit, and it's I know it's 100% different. I'm from Montreal, and all of the culture that you described is it's not it's not there yet that much, especially like OnlyFans and things like this. So talk to me a little bit about the culture in Miami.
Yeah, Miami is really interesting. I would say it's very hyper competitive. It's one of those cities you get around here, and if you don't have your shit together, you'll see a bunch of other people that do, that are in good shape. They're making good money. They have a lot of passive income. They have good relationships and good people around them. And then I think on the other hand, a lot of there's more distractions than anywhere. So if you're gonna live down here, you need to be very disciplined in the deepest parts of your mind and your heart. You need to know what you truly want, and you can have a life of balance and still have both. The whole OnlyFans situation, I think it's interesting because they're profiting off of a trend of men having low testosterone and being weak, and there's a growing industry, which is it's very sad.
Hmm. Yeah, and I would have to agree with you that it's very sad. But are you optimist for the future, or do you think it's just gonna keep the generosity or is gonna keep increasing, and the trend is gonna increase?
I don't know if I would say I'm optimistic, but if I ever see, I mean, that's why I've supported people like Andrew Tate so much, because he's bringing a large community together that doesn't really have a voice, and combating what the media is perpetuating. So I think it's really powerful, and if we have someone like that, that's kind of leading the race and pushing these people that are pulling the strings against their backs.
Hmm.
That I would 100% want to unite with that, and that's the only solution, which is creating a uh, mass amount of educated men, right, that listen to um, people like that, and instead of the media. But if the media keeps doing what they're doing, I mean, they have more control than any single person can. So it depends how bad the corruption gets, and
It's
yeah.
a battle of information, like most of the problems today.
And it comes to the point where you got to just help yourself, and you have to help your family before you can really start to help anyone else, since it's very tough world. There's a I think it's going to get worse from now on, because like I'll give a interesting example. Student loan debt was on hold because of Biden's plan. So no one was paying their student loans, and that just got ruled against by the Supreme Court. So now all these people that are living paycheck to paycheck, they're now going to have to pay their extra 500-600 a month, and they just won't be able to, because they've grown accustomed to, they're already living kind of on the edge, and it's not going to be forgiven anymore. So life is going to get very, very tough, and we're in a massive debt and interest rate crisis, and the effects will show a little bit later on.
Yeah, I think yeah, you kind of did an interesting link to the, the economic situation. But yeah, and I'm not optimistic as well regarding the economy for the coming year, and even for the coming decade. Ray Dalio even said that he's calling for another lost decade, and and that's why in our hedge fund we're trying to be as uncorrelated as possible to the broader market conditions. But yeah, I mean, the U.S. debt, man. I mean, I've talked about it with a lot in my other podcast. But yeah, my I think the U.S. debt is like it's just a question of time before it collapses. However, it's gonna collapse, but before something big happens. And as I talked a lot about the cycles of these currency cycles, the real reserve currencies that changes every I think it's 120. I don't want to 80 to 120 years. The last
The
average how can I say expectancy of the last 5 years of currencies. And now the US, I think it's at 78 years and approaching 80 years. So it's and you look at all of the work done by Ray Dalio, which I think is amazing, regarding the cycles, and the fact that the everything the US is doing, basically, in the macro level, of course, it's all been done and repeated through all of the empires in history, and the cycles doesn't change. But the thing is that the people alive change, so they forget. So all of the things about how they export the manufacture, the workers, they export all of the product manufacturing to China. It's all a cycle. Like, the past empires have done the same, and now the US, according to Redalio and other analysts, would be entering a descending trend of their empire. I'm not saying they're gonna collapse anytime soon, but I'm saying they began the trend of downward. Well, they began their downward trend.
Well, the reason
So
that's happening is a lot of people that actually control institutions like the Fed and pull the strings of the U.S. government are actually globalists, and they're working with the WEF and the IMF, huge
yeah,
organizations.
well, I mean, I agree with you, but would you say that this was also the case for all of the previous world orders?
I believe so. I mean,
So, yeah,
depends how far you go back. But they always fund both sides of the war, and just to gain more power for themselves. And they do it in very intricate and interesting ways. So I
hmm
think if you go down that rabbit hole and you truly understand what their motives are, then you can actually identify where the world is headed and how to safeguard your own funds and create the best strategy moving forward. But if you're blind to it and you
yeah,
believe what the media will tell you, then
because I agree with you, but I'm not so sure if it's like I think that the cycles of empires are a natural thing that is repeating itself, and it's a natural cycles. But I think that the people in power are clearly profiting from these cycles and are not fighting them at all, and they even might be accelerating it, especially
escalating it.
now. Yeah, escalating it, especially now. Like you said, the WEF, that's a scary subject. I mean, nobody is paying any attention. I mean, there's a little bit of attention, but like not enough. And the CBDCs, the central banks are starting to push to have CBDCs more and more. And I do think that this is where it's headed, not because it's the best solution for us, but because it's the solution that matches best the interest of the people that are really in charge. To have more control, um, more power, more control. That's basically their motive, and that's also why I'm not bullish on crypto in the long run.
Yeah, it sucks. I'm a big fan of XRP and a couple other projects, but I don't know if it'll be mass adopted as people think it will be. I think they're going to roll out CBDCs, and it's going to be completely different than you know the whole decentralized idea that people have fell in love with. I definitely actually am bullish on crypto still. Um,
Yeah, I
but
mean, you can definitely find some good project, and there clearly can be some nice cycles, and another bullish push, two or three other bullish push. But to be adopted as a main currency, I think CBDCs are gonna win.
yeah, because it's going to tie into people getting a guaranteed income and robots and technology and AI
Mm-hmm.
replacing a lot of jobs. So it's all going to align at the right time, and once they give people a guaranteed income, they're going to
Yeah,
have to follow certain rules in
this
order
part.
to get that. They won't be
Mhm,
able to find a job anywhere else, and it's going to be inflationary. So the money that's being put into people's accounts, they have to spend to inflate the
mhm.
economy. No one's going to be able uh,
Save and invest.
to to save and invest for the long term. It's going to be required that you spend this money, which I hope it doesn't get to that point. That's
Yeah.
what they're trying to accomplish, and no transaction ever escapes the blockchain. So it's going to give them crazy more amounts of surveillance power. They're going to build profiles on everyone based off of what they spend, and how they spend the money in their bank account. And
Hmm.
it's
The guaranteed income theory and projection. It's, I mean, it's because I do think that CBDCs are going to get adopted, unfortunately. But do you think there's actually going to be a guaranteed income because of the deflationary aspects of a technology and how it's going to take everybody's people jobs? Because I think there's always going to be jobs.
I don't think there will be enough.
Do you think? But I think the jobs will change. There will be more, because the thing with AI, even white collar jobs might go out as fast as blue collar jobs. But it's hard to predict. But it's gonna create jobs, definitely, but it's gonna remove other jobs. But do you really think that the government is gonna implement some kind of guaranteed incomes and that everybody will just nobody so nobody will work and everybody will receive income?
It might get to that point.
Yeah,
We're nowhere close to that point.
I mean, in Canada it
But
exists.
it depends. It depends when AI also hits singularity to the point where we can no longer keep up with it, um, and it gets to the point where it's thinking way quicker than any human can, and it
Hmm.
just starts to compound, and that's very scary. But once it gets to that point, my point is that all the progress of technology will speed up, and I hate it and I love it because that's what we need in order to revolutionize space, which is such a complex thing. And with how big the universe is, we need something that can think in a different way and make itself smarter every second than humans ever could. And
Hmm.
it needs to be regulated and set up to the point so that we can actually use it um, in the correct way.
Hmm. Yeah, and so it was amazing talking to you, and I really enjoyed the conversation about, of course, finance, but the last part about the future, I think it's we need to have this conversation more often. But unfortunately, I'm trying to keep my podcast under 50, I mean 60 minutes. But man, it was great to talk to you.
Appreciate the time, Alex.
Yeah, and I wish you all the best for your company, your future endeavors. I hope you never age. And if people want to get in touch with you, how should they contact you?
So my Instagram is jfit16, jfit16, and I that's mainly what I operate off of. And then I mean, yeah, we don't do too much else. So that's where people should reach me at and follow the journey and whatnot.
Hmm.
Um, I think is the best way.
Perfect, man.
Our website is also spiderpam.com. Um, hasn't been updated in too long, but we have a lot of info on there. And ultimately, the goal is for people to reach out privately and then just to continue the conversation there. But yeah, that's the best options.
Hmm. All right. Well, sounds good. So thanks for listening, everybody, and have a great day. Take care.
Pleasure. Good night.